Let's get some perspective going on the budget and the markets. Rajat Rajgarhia is head research at Motilal Oswal Securities. Rajat, good morning. Great to have you with us here on the show. I've got your views here with me as far as the budget goes. You're saying, you're expecting a roadmap on oil subsidy issue, implementation of GST, at least a roadmap, and realigning of the DTC, direct tax code. What's your realistic expectation? Oil is at 108, 110. Indian baskets now over 100. Do you really expect the government to move on the subsidy front with any amount of vigor? GST is largely now probably a political issue more than anything else. You might have a timeline, but do you think anybody is going to seriously believe it? We're going to implement it by 012, 013. I think the last stated was in about a year's time. So fiscal 13. DTC probably yes. So what are we talking about here in terms of the budget?
Well, I think you summarized the mood of the markets quite well, that we are entering this budget with very low expectations. Let me address the 2 points. First, on the oil subsidy, I think we missed the opportunity last year when we could have deregulated the way we did petrol. We could have at least done to a large extent in diesel, but now deregulation at this point of time looks almost impossible. What we are expecting is that first you need to moderate the custom/excise duties on some of the petro products, which basically, because as the oil prices keeps on going up, you see the government collections also keeps on growing, so some element of hit will be taken there. That's one. And second, you will need at least some clarity coming on how that once the inflation starts moderating from March onwards, then some element of roadmap for passing on at least the diesel prices will be made. I don't see much of difficulty to implement them, but I think at least this budget will need some clarity in terms of just to understand how much of subsidy the government is modeling when they present their P&L account. That's one. Second, on the DTC, we both are in agreement that this is the last year before DTC gets implemented, so you may see some realignment to some of those proposals. Third, as far as the GST is concerned, this is a very, very major reform. So a delay of 1 to 2 years in implementing such a major reform is really not a delay, because you need a very strong political consensus before you can implement such major reform. We should remember that some of the other Asian countries where GST has been implemented, it's been almost 5 years where they are still trying to realign and making modifications there. So we are quite hopeful that GST will be implemented even if it's delayed by a year or so. But this is something where the roadmap will be unveiled, I hope, when the finance minister presents the budget on Monday.
Okay, got that. Anything on the because the DTC is around the corner, would you say tinkering with some of the tax items would be left at the minimal, or do you expect anything overarching as part of this budget?
I think the original DTC proposal had some major tax changes compared to the revised DTC proposal, which has watered down significantly. You may see some moderation or tinkering in the corporate tax rate, where the surcharge may go and MAT may be increased, because they have already been proposed in the DTC. So the government may make those changes on its own in the upcoming budget. You may see some minor tinkering happening on the personal income tax slabs. But we must remember that we are entering this budget at a time when the government needs to focus more on enhancing revenues and controlling expenditure if it wants to contain its fiscal deficit, which means that the expectations would rather be low when you are looking at the proposals.
Okay. All right, let's move away from the budget. Expectations running low, probably prudent to anchor your expectations low going into the budget. Might as well be surprised positively. What a view on Reliance? I wanted to talk about that, Rajat. What's the upside from here for RIL after this deal?
Well, if you analyze Reliance between 2003 and 2008, at all points of time, the street's target price was always lower than the prevailing market price. And you kept on seeing the target prices just getting higher as you got more clarity on the E&P side of the business. Let's remember that the other two businesses, which is refining and petchem, while they are cyclical in nature, they don't provide any big upside as far as the target prices are concerned. In the last 18 months, we just saw a reversal where E&P continue to see moderation in the target prices, not just amongst the existing producing fields, but also on some of the prospective fields as people lower down their expectations. I think we are at a stage right now where the downgrades on the E&P has already happened. We are not going to see any further downside. But because now you have a very strong partner which can use its own technological expertise to explore not just some of the existing fields but also some of the prospective fields, the target prices in Reliance will be a function of how much more discoveries you see. The whole world today has its own valuation of the entire KG block, but that is largely on the assessment of what is known today. And we have seen that this business is more about what is not known today and what keeps on getting discovered. Even if we value the stock today based on all that is known today, I think you will still have an upside of maybe closer to 10% in this. But as I mentioned, this stock is again going to be a function of how much more discoveries you are going to see or production enhancements you are going to see over the years to come.
Absolutely. And you could look at it the other way as well. If it is about what is not known right now, and as you said, BP with all its know-how is coming in with their eyes wide open, they probably would have made a reasonable assessment of what could possibly lie there. So that's the other way of looking at things. So they've fixed a value after this transaction to the E&P side of things. Look at it both ways. So but you're saying 10% probably upside from here. Go on, Rajat.
Sorry, I think there are two more points to consider in case of Reliance. First is Reliance has sold a stake to a very strategic guy, not to a financial guy. So this is not a financial investment that any investor is making in the company where you can just drive up the stock by 40-50 rupees and then just say that things have got factored in. This is a strategic guy and a guy who has a far superior knowledge of running E&P than any other player in India currently is operating at. And I think more importantly, BP has already committed and pretty aggressive capex over the next few years to come, and Reliance is going to match that capex by $2 for every $1 of BP. So that itself explains the prospectiveness of this entire E&P block, which somehow over the last 18 months saw a lot of moderation. So I think people will start becoming more hopeful, and that is what will drive the stock.
Got that. Rajat, running extremely tight on time, so we'll leave the chat here right now. Thanks very much for dropping by. Hope to get you on more things as we go along post-budget as well. Thanks very much.